Hello, everyone, and welcome back to the Make Life Less Taxing podcast, the show where we uncover what really creates freedom in life and business, and we'll explore stories of those who've learned how to build wealth with purpose.
Hello, everyone, and welcome back to the Make Life Less Taxing podcast. I am your host, Daniel Hanzelka. Today's episode continues an ongoing segment we call the Tax Intelligence Files. These conversations are designed to help you to see the tax system differently, not as something to fear, but as something to understand and ultimately to navigate intelligently. Today, I'm joined again by Miguel Palma, a CPA and a tax strategist who has spent many years working with high-income business owners and professionals. Miguel specializes in helping people move beyond the basics of tax compliance and start really thinking strategically about the structure, timing, and long-term wealth. Miguel, great to have you on the show again.
Thank you very much for having me. And we were talking a little bit about some of the things that you have done and very, very personal stuff. And I think that when I think about everything that you hear, you have to connect as an individual in order to connect as a professional. I really believe that because and that's something that you're doing here. So I want to thank you for that. And I'm really enjoying it.
Yeah, it's great. Listen, Miguel, my belief is that everybody, we're our own personal brand, right? Like that's what we are. When we're business owners, the founders, and our personal brand is who we are. And I think that's why people go and work with us, because either they like working with us or they don't, and I rather work with the people that I enjoy working with, that do like who I am. And the best way we can do that is just go and share stories and how we work with individuals, right? So,
Absolutely. And
yeah,
that's what we're doing here,
yeah,
trying to print a visuals, I think, on an open canvas, right? Because some people are seeing that for the first time and they're looking at you, they're looking at me. And right now we're just an open book.
yeah.
And what we're trying to do is just put the pieces together so they can relate to us. And that's what we're trying to do here. And that's what we're striving to do. Doesn't mean we're going to be able to do it, but little by little.
Well, listen, all we can do is our best, right? So
Right.
that's all that we're asked for. So listen, Miguel, when someone has built a successful multi-location business, what's usually happening behind the scenes with their tax structure that they don't realize?
Let me back up a little bit. So remember that they start at a given point, right? They have an ability and they have contacts, and now they decided to leave the corporate world to make life less taxing and now pursue their dreams, right?
Mm.
So they start very, very basic, i.e., in terms of accounting. So some of the things that I think we separate a lot in people's mind is accounting and tax, but they're co-jointed, right? There's some synergy that we have to take care of. A lot of times people come and they want us to focus on their tax planning, but we look at the numbers and they don't make sense, right? So that's a big, big problem. And I'll share something personal. We're having problems in our firm because we're seeing some churning,
Mhm.
right? People want to come in and they want to get the taxes done. They want to get the tax planning, but we have a fiduciary responsibility, right? They have the business. It's been established. There's cash in the bank, but their accounting is terrible. I'll give you an example. We have a client that is acquiring a lot of businesses, but we went back and we looked at the numbers and there's $1.5 million sitting in accounts receivable.
Mm.
Half of that, almost $700,000, goes back to 2016,
Oh, wow.
right? More likely than not, either he's going to get the money or got the money, or probably not going to get the money if it's outstanding.
Yeah.
The point I'm trying to make is just that. Fixing that is not exciting, it's not sexy, but just fixing that. We caught that. Simple review. Just looked at it and said, okay, there's a problem here.
Yeah.
Right? So let's just say it's $1 million. That's a $400,000, $500,000 savings, depending on the tax rate. So again, is the structure hasn't grown with the business. It may be the underlying structure was wrong. So a lot of times I think that my internet, let's talk internet. So now you're building a new business, a bigger business, and you're still running it on a modem.
Yeah.
Right. So think about that for a minute. So we can talk about taxes. We can get very creative, but I really believe a key is make sure you have the foundation because as you grow, you were maybe at a million. In this case, this person is at a million, grew to 4, 3 years,
Yeah.
now 7, probably going to double that next year, right? So it's not sexy again. In his mind, he's going out doing all these sexy deals, but we're looking at this and saying, you have a real issue. So that I think can be problematic, right? Because it doesn't flow with what that CEO is doing. And I think for us, and I was telling you something personal, is that, yeah, I mean, somebody comes in on average, we save them between 125, 150, right? And but we're also focusing on something for an entire year that is not sexy. The accounting, we're finding errors, right? So we're not moving as fast. Although for me, somebody gave you 125 or $100,000 is a lot, but some people need more. So for the people watching us right now, a good friend of mine said, "What happens when a chicken lays an egg?" Generally, I don't know. Have you seen a chicken, at least in movies and stuff? They make
Yeah,
a
no,
lot of
I've seen it in real life. Yeah,
yeah.
I've been
So they
around
make a
chickens.
lot of noise, right?
Yeah,
So
yeah,
that's something that the people watching us should do. When you accomplish something for the client, bring it up,
yeah.
bring it up. Because 6 months from now, a year from now, is going to be, what have you done for me lately? And they forget that huge accomplishment. And it's something that I think we need to implement and maybe do it monthly, do a report card.
Yeah.
Hey, we did this, and we did this. So it's fresh in their mind when it comes time to renew.
Yeah, no, you bring a great point. I think so often we just keep on rushing forward and moving forward. We don't start looking backwards and recognize what we have done.
Right.
So maybe that could be part of the answer for the next question that I have for you. So why do so many businesses that really grow organically often end up with fragmented or misaligned structure over time, and how they kind of set things up?
So going back to the earlier point, right, is that the modem analogy.
Hmm.
Some people, I hope they're old enough to remember the modem. You got mail, right, with American Online, and you were here,
Yeah, the
connected.
dial-up. Yeah, no,
Yeah,
you're
the
talking about
dial-up, right?
dial-up. Yeah, dial-up internet. Oh man, that was painful to think about it. Yeah.
So you have a modern business build an old wiring structure, right?
Mm,
That's basically it, right? You're growing, you're growing, you're growing, and the structure wasn't there to begin with, right? Wasn't big, and now you're making it worse by putting more pressure on it. What was the second question? I forgot.
No, no, like what when people are building businesses, and I think this is what you're talking about with the modem and everything, right? Like they keep on moving forward, but they never go backwards and start changing the infrastructure, the structure of everything that they're doing, especially probably around taxes. You mentioned businesses, they're kind of focusing on and having accounts receivable that are 10 years old and they're not collecting on it. Like that's a major problem. Again, it just means that they keep on moving forward without like pausing and stopping. So why do you think that, beyond what we've said so far, why is it there that their business becomes so fragmented and misaligned?
It just doesn't feel exciting.
Hmm.
It's not productive, right? In their minds, it's not productive. It's exciting to be talking to the bank. It's exciting to be talking to the company you're going to be acquiring. It's exciting to look at the cash flow that you're going to have. It's exciting to integrate it into your business, right? So this is not exciting. It doesn't feel productive,
Yeah.
right? So to a certain extent, is the old accountant killing the mood? But it's painful, like you say. That's a lot of money that was overpaid. Let's assume, if something is that old, two things happen. They collected or they didn't collect,
Yeah.
right? If they didn't collect, that means that they pay 400,000, $500,000 in taxes that they were not supposed to. Something basic, right? That to me is fairly productive to get $500,000 back. So I
Yeah.
think that's what it is.
Yeah.
And now what you're doing again, you're compounding the problem. You're stacking revenue into that flow. The pipeline is plugged, and now you're putting more revenue into it. So now you have to build a foundation in order to improve it. So that to me is the main thing. And that's how people end up paying 40%. So take care of the foundation. It makes our job a lot easier to empower you to cut those taxes, or vice versa. You're empowering us to cut those taxes. So if you meet someone like us that will look at the numbers and say you have a problem here, pay attention to them and try to understand. Sometimes accountants are guilty of talking too technical. So push, make sure you get the answer. And if it's $500,000 that you're going to pocket, I think that's exciting and productive.
Yeah. Well, you bring a good point, and I think I know I struggle that in the business sometimes, where we're just so excited about getting new leads and new potential clients coming in, and we go and bring them in, and then we forget that we have to do the fulfillment or the work after that. Then we just
Right.
focus on just bringing people in and forgetting what's on there, right? So I think that's kind of the similar thing is people are excited about growing the business, but again, when it comes down to having the proper structure for their accounting and finances, those are the numbers that are actually going to show you if you're succeeding or not.
So growth without structure is leakage.
Yeah.
That's really the bottom line, right? But it's not exciting, but you got to
No.
do it.
Yeah, no, you bring a great point. Now, when business owners own multiple buildings or assets, what blind spots do you most commonly see them overlooking?
I think again, the basics, right? So I have a client, a dentist. They run two practices with different specialties, husband and wife team. We looked at it and they own the business, which is great. It's something that we encourage, but the rent is below market.
Mm.
So right away we say contact your broker, real estate broker, find out what the market is for those properties, right? So we went ahead and did that, and now they increase their expense. They're taking money out of the business, and it's tax free,
Mm.
right? And we're not being excessive. You got to be careful, right? Whenever you pay rent, it's got to be reasonable. It's got to be within the market. It's got to be fair market value. That's
Yeah.
why we always say go and get a quote from a real estate broker and find out what you would pay to lease that building, right? And then let's implement it. So sometimes those basics, again, can improve cash flow and can decrease taxes. A lot of times people get too busy setting up LLCs, and I'm all for LLCs is good. But some people believe, and some clients believe that by setting up an LLC, you're cutting taxes,
Hmm.
right? So put you on the spot. Why will you set up an LLC? What's the only thing that an LLC accomplishes?
Well, I think for me, it would be primarily just to protect myself from liability. That would be the one thing that I would look at, right?
Exactly. It's as simple as that. It's not going to cut your taxes. Never is never going to cut your taxes,
Yeah.
right? You're protecting yourself from liability. And what is the least expensive and less complicated way to do this? Get an umbrella policy,
Mm.
right? If you don't have time, but put the structure in place, i.e., run a study. You have a building now, you're going to rent it to your corporation. Make sure that what you're charging is fair market value. Another thing that and this is not related to this, but I want to leave your audience with this nugget. You hear all the time, set up all these LLCs. It's overkill. Okay, so you're operating in California or New York. Taxes are very high. Have you heard some things in the past from other people? Go to Nevada. They have zero
Oh,
taxes. Go to Florida. They have zero taxes, right? Go to, I think, Wyoming or Wisconsin is another one. It doesn't matter where you go. If you're operating in California, guess what? You're going
you
to
got
be
to pay
paid,
the tax. Yeah.
right? So those are the things that I think that people get from YouTube or TikTok or maybe their attorney. But first, we got to put the structure in place. Does it make sense?
Yeah. Well, you bring down to, and I know I've mentioned that before, that like at the beginning, whatever you go into, so if you're starting a business or whatever investment you go into, the number one question you have to answer is what's the exit strategy? And I think this is where people run into a problem when they start a business, when they do an investment or buy a building or do something. They're so excited about getting it that they forget what is the exit strategy. And most money, I think, that's leaked out of anywhere, the most tax, right, that comes on out of stuff is on the sale of the of the business, of the property, or whatever it is. And it's the least amount of thought that people put at the beginning. And
Exactly. And I think a lot of the times you go back and people will say, well, if you're very successful, you increase your audit risk. That's true, right? But most times the success doesn't break the system.
yeah,
It just exposes it,
yeah,
right? And that's when you get the audit letter and it's the old structure cracking under pressure, right? And that's what it is. So revenue is great. It increases visibility. It may increase the audit risk, and it's fine. Don't be afraid of audits. It's just an inconvenience.
yeah,
If we're doing everything right,
proper.
it is documented. It's just a code,
Yeah,
right? It doesn't have to get you in the hospital for a month, right? Because you're not sleeping well, you don't drinking water, you're not taking cold plunges,
yeah,
right?
but
You're not taking cold plunges, you're not taking your vitamins. It's just documented.
yeah,
Means when you document it, here, go crazy. Give it to the IRS. Don't give them more than they ask. Only give them what they're asking for. Just that. Don't give them more ammunition. But that's it, right?
yeah,
So if you have the system, very basic. If you document, you're okay. So don't worry. This is another thing that I've heard from people. You know what? I have the opportunity to grow, but I don't want to pay more taxes. You're not going to pay more taxes, right? Let's just do it right. Let's
yeah,
talk first. Something that kills me all the time is somebody buys a business. Hey, Miguel, I bought a business. Okay, great. Congratulations. But if you bring us in, we can look at structuring that business more towards the asset side, which you can write off right away, take depreciation
yeah.
instead of goodwill, which takes a long, long time to write it off. Something as basic as that. Make sure that you have your team in place.
Yeah. No, you bring a great point. And again, it's knowing and having the structure, planning ahead of time. But even when you go get there, if somebody's thinking about selling assets or selling their business, there are strategies how that tax, that capital gains tax, can be reduced or completely eliminated or pushed back. Again, all of the planning has to be done before. I think, unfortunately, people just go and rush into it. Then they rush into the business, and then they're rushing to go and sell it, and then they're wondering how come they're not maximizing on what they're, what they can go and get out of it. So, you know what? Speaking of that, how does timing when something is purchased, replaced, or restructured change the tax outcome, even if the business decision itself basically stays the same?
I think a lot of it has to do, timing is obviously looking at the current situation. The only way you're going to be able to assess, Daniel, the current situation is looking again, what is going on? If my revenue increase in the first quarter, is it likely to increase in the second quarter,
Yeah,
or third, or fourth? So we got to come up with an idea as to what's going to happen. A lot of clients are very good. We have a client that is in security management, and the clients are his clients, Amazon, Google, and all the big companies. And he'll project out and say, okay, so I'm doing this, that money is going to come in, and we're doing it all year long until the end of December, right? So the point I'm trying to make is let's look at your tax exposure and time it properly, right? It's something as simple as if we're going to be funding your retirement to the max, you need to get the maximum compensation that will allow you to fund that. And this is for you, tax advisors. You should call your client and say, hey, the limit to put the most money in your retirement plan is $360,000. Make sure that that is what you pay yourself, and you're going to be able to double or triple your pension plan
yeah,
contribution, defined benefit plan, cash balance plan. And sometimes that may be contradictory with what the accountants say, right? Because the accountants say, well, we don't want to maximize the payroll because you're going to pay
yeah,
payroll taxes and this and that. Well, Social Security has a limit. Medicare has a limit. 360 is below that. So no, that doesn't hold up. The other thing to make sure is that you remember that there's an obligation to pay yourself a reasonable salary. You can't be eating steak and pay yourself a pizza salary, right? Because the IRS can come back and restructure it and have
Yeah.
you pay the payroll taxes. So timing, the question was timing. So the asset you're going to buy next year, see if we can buy it now, right? It has to be put in place. I was looking at Grant Cardone, and he was talking about buying a plane right before the end of the year. And I'm going to be reacting to that in my Instagram or TikTok. Well, one of the things he forgot is that you got to have it in place.
Mm.
It's got to be used in business in order to write it off. So timing is very important. So don't buy it at the end of the year, 30th, 31st, because technically it's not a deduction, right? Your payroll, maximize your payroll and start really early on so you don't feel the pinch at the end of the year.
So here,
So
I want to go back. So is that, you mentioned the plane, right? So is that pretty well with everything? Like it has to be used in the year that you purchase it in order to really classify as that. So if he bought it in November and flew with it somewhere for business, he could claim it. But if he buys it, like, let's just pretend on December 31st and it's delivered on December, that doesn't matter because, it's not going to be so then he would have to claim it on the next year, right? I mean, that would be that, but it's not really saving. Okay. Because
and a lot of times you go into TikTok, and it's hard for us and it's getting worse. Every month we get one or two things that somebody heard on TikTok.
Yeah.
And they want to know why, or YouTube.
Yeah.
And is this prominent YouTuber, and they want to know why we haven't implemented that. Right. And I can share some wild ones with you.
Yeah.
So yeah, I mean, the asset, a building, you build something has to be in place before the in place and used, right? For
Yeah.
business purposes, in order for you to deduct it. That's basic tax law. So
Yeah.
some of the things don't hold up. So some of this, one thing to remember is assets don't optimize without structure. They just confuse the situation,
Hmm.
like the plane. And we've helped clients buy planes, right? We didn't help them, but we structure
Yeah.
it in ways that is tax deductible. You got to have flight logs. You got to have names. Why did you go or fly to Nevada? Right. One example is a client that is into flipping properties. He couldn't buy properties here in the Bay Area because Silicon Valley is so crazy, right? So
Yeah.
he would drive 4, 5, 6 hours to look at properties, make an offer, and then that's how long it took him to get back and forth. We came up with the idea, let's buy a plane. Nothing fancy. It's a Cessna 1979, fully deductible, but it was bought in the right time.
And for the right purpose, right? I mean, there in that case, there is a reason. Hey, I'm actually doing this traveling, going back and forth. Again, we're not picking on anybody here, but with the earlier version of the plane, is it necessary for the business, right? And I'm sure it is, but I think that comes to into that too. So it's all about relevance, right? So you know what? I know that many business owners kind of believe that they're doing everything right because their accountant or CPA files on time. And I think this is kind of the big thing, that it's all about compliance. But just because the accountant or CPA files on time doesn't mean that they're taking advantage of everything that's out there, right?
Yeah. I mean, I think that is like having cash in the bank, right? How many of you that are watching this manage your business by looking at your bank account, right?
Yeah.
I have enough money, so I'm okay, right? But you're not setting aside money. And I'm just giving an example. You got the huge commission checks. You should set aside $20,000, $30,000 so we can fund your pension plan, right?
Yeah.
Advisor that's watching this, your pension plan as well. So I believe that a lot of the focus, and it's right, you should be compliant. But again, the compliance aspect of it is not just that filing. It has to be compliance every step of the way. And again, we're not picking on anyone, but this one person, Grant Cardone, said in one of his videos that he went out and bought a Rolls Royce, right? And deducted it. The same thing towards the
Yeah.
end of the year, conference and all this. And I'm making this very clear. It has to be right, but it's not just the filing, but the everything, every single
Yeah.
thing has to be documented. It has to meet the requirements. Otherwise, you're going to get in trouble.
Yeah. No, you
So
bring it great.
and being compliant is important.
Yeah.
You see a lot of advertisement too, where people knock the CPA for being compliant. We don't want to do that because you paid them to be
Yeah.
compliant. You paid her to be compliant, and they did their job. So I think that's important. That's a plus.
Yeah.
But doesn't mean that they optimize your tax situation. Doesn't mean that they're building wealth. And while we're at this, is very important. I think I contacted you recently because a client of ours is looking for a financial advisor, and she has some very specific requirement. And I said, who better to call the man with all the contacts, right? And right away you came up with suggestions. And I think that's very important. That's the other thing that is very, very important, is to make sure that everybody's talking all the time, right? Because if the attorney is talking to the CPA, they're going to tell you, look, they're thinking of buying this building. Have you talked to them? Or vice versa, right?
Yeah.
Or that the financial advisor is following what the client wants, right? So we've had issues where financial advisors are working with us and they get upset because the client is doing something different. So we need to have that very difficult conversation as well.
Yeah.
I
No, I mean,
digress.
that's something. And again, I know, and we spoke about that. There's financial planners. Hey, I call myself a recovering CFP, but I think at the end of it, I think every individual, family, business owner, they need somebody that can actually go and pull out and look at the whole situation. Because we've seen this kind of having this quarterback. We've seen situation where somebody was, getting one message from the investment advisor and almost the opposite with an insurance guy, and then you put a mortgage person into there, and then you got a realtor into there, and you got an accountant, and you got all of these people, but nobody puts them around a table and says, "Hey, how do all of these things work together?" And sometimes the strategies are literally working against each other, creating a huge drag on the results, and people are getting frustrated and they're actually essentially losing money, right?
And I'll give you an example of something that most people don't talk about. You probably heard of bases, right? So in order, a lot of times we create a lot of losses with what we do, right? A lot of losses. But there are times that the client cannot take all the losses. There's a limit to that because they don't have enough basis in the business. And people are not aware of this, right? We had a guy that came to us and he had a loss, I think, of 250, was only able to write off 80K. And he was upset with their accountant. And I said, well, don't. Maybe be upset that they didn't tell you this, but if you take the money out that you generate, by the time you create those losses, you're not going to have basis.
No.
So one of the things that we said, okay, why are you taking the money out? So I can earn on the stock market. I said, perfect. You don't have to take it out. You don't have to take it out of the S corp, leave it there, invest it. But when the losses come, we can write them off. So this is in sync with what the advisor is telling them. All we did is we tweaked it a little bit.
Yeah.
Instead of pulling the money out of the corporate account, leave it there, invest it for them instead of having the money at the bank. Now they're earning. So I think a lot of times the client benefits and you benefit as well because you're meeting your your fiduciary responsibility.
Yeah. Now, I know that there's a lot of different strategies, right? Now, let's just talk about this one. When a family member enters a business, wherever it's a child or a spouse, what are some of the planning opportunities that are often missed simply because no one really asks the right questions? And if someone's listening today, what are some of those things that maybe they should be thinking about or asking?
I'll give you an example. I'll get back to the child, but one of the things that we notice is that the spouse is helping with the business. There's enough income to go around. There are a lot of taxes that are being paid, and something as simple as add your spouse to the payroll.
Mm.
Add your spouse to the payroll. And just doing that opens up all kinds of benefits that the spouse could get and all kinds of tax deduction that the individual can provide, right? As long as they're not discriminating with the rest of the employees. And that's something very, very basic. A child, we seem the extreme too. Little 2-year old or even infants where the parents are paying them, right? You can pay a child up to the standard deduction, and
Yeah.
that's zero taxes. That's fine. But if you have an infant, you can't pay them as a model, right?
Yeah.
You can't. And oh, but so and so told me, I don't care what they said on YouTube. Yeah,
Yeah.
it's a valid strategy. You can pay your child, but it's got to be market.
Yeah.
It's got to, whatever they're doing for you, how much will you pay somebody to be a model, right?
Yeah.
So a lot of times I think that that's a big one, right? Hire your child, work with us so we can put together a description of what the
Yeah.
child is doing for the business. So the IRS, when they come knocking, it's going to be okay. And then the rule is always you're allowed now to fund a Roth for the child, right? They
Yeah.
have earned income. So take that money and dump it into a Roth. Imagine if somebody would have done that for you when you were
Yeah.
8, 9, 10 years old, would have been pretty sweet. So yeah, I mean, that definitely works. And I believe that there are tons of opportunities. Let's say that you have a client that is very busy, uh, and she's working, doing all the hard work and bringing the money home. And the guy is at home helping with the kids and doing both equally valuable, right? But now the kids are getting a little bit older, so there's more time. Let's get into real estate, right? Let's put a structure together where there's some real estate that can be bought and you can write it off because the spouse is working on not only your building, but acquiring more properties, right? Short term rentals, buying buildings, buying apartments. So that is huge as well. And if you don't want to do that, you don't want to deal with the 3 T's: termites, toilets, and tenants, that's fine. That's fine. We could also set up a management company, right, to manage
Yeah.
your business, your investments, and we can create some opportunities there to take out tax-free money and generate deductions and create wealth.
Yeah. No, and again, you bring a great point now. Going back to, we were talking about at the beginning, somebody they own more than, one business or one property or one income stream. What's the first question that they really should be asking themselves to determine whatever their structure is, working for them or really working against them?
Exit strategy. Exit strategy. I mean, why are we doing what we do? Right.
Yeah.
So let's look at exit strategy from the very moment you get in. And are you thinking of leaving your profession? Let's take a financial advisor. Let's take an attorney. And now they're doing all this work, right? Do you want to continue doing the same thing? Or are you going to be doing it for 20 years? And what is the exit strategy? What are you going to be doing next? We met with a 55-year-old this week, and the 55-year-old said to me, Miguel, I got to refocus on my family. And we had this conversation, I remember 20 years ago. I worked enough, and I think that the foundation is there. Now, uh, I can start doing the things we talked about 20 years ago, right? So it's time for me to exit the rat race. And I said, so what are you going to do? Says, my parents are getting older, so I'm going to go back to China more often. I may
Yeah.
take some classes. I want to spend more time with the kids and my wife, right? Because I work so hard. So I think exit strategy is something that we often overlook, right? I tell my kids, I don't think I'm ever going to have an exit strategy, right? That's just my personality, but it's something that I thought about,
Yeah.
right? I always tell them, if you retire, you expire. So I don't think I'm ever going to retire.
You
But
know,
it's something that, it sounds callous, but it's something that I know. I
yeah,
know
no,
myself. I want to be learning. I want to be teaching. I want to be doing. There's only so much golf you can play. There's only so much travel you can do. There's only so much Netflix and YouTube that you can watch. So I think that that's going to be my exit strategy.
yeah,
So bringing family changes the game, but you must have structure to follow that.
yeah. No,
Don't
listen,
hire your kids. Go ahead.
I'm all there with you when it comes down to retirement. I don't believe I retire. I'll probably not going to be working at the same capacity when I'm in my 80s and whatever. But I can't imagine just sitting around doing nothing. I'd probably go crazy. So no, I'm on that with you. And again, keep what is yours and break free. That's one of the kind of stigmas that we're trying to come over. I personally believe that the whole idea of retirement in the financial services and how it's presented, it has been mispresented, because I think a lot of people, they really should be doing a lot more planning what they want to be doing, and they should not look at retirement as, oh, I'm just going to do nothing. They should just look at it as entering another career, just maybe different or reduced. Because I've met with a lot of, especially entrepreneurs and business owners, that were like retired for a week. And then it was like, Daniel, I had to go back and do something because it was like reruns on TV. It was the same day, same thing every day, over and over. And it's like, there was only that many golf games I can play with the same people that are at the course. I just had enough, and I can't do this every day, right? So,
Or pickleball, I think. Isn't that
yeah. Now,
what is the
pickleball, that's the new thing they're doing. I've never played it. I've seen it played. I understand tennis. This thing, it is a physical game, but it's a thinking game. The way they score the points and doing stuff, like, you have to do certain things. So it's not just physically exertion. There is, like, you got to do some thinking and planning. So it's kind of, they put those two things together. So it sounds like an interesting game, but like I said, I just thought, oh, it kind of looks like a simplified or an easier version of tennis. It's kind of like a ping pong. And it's like, no. There is a lot of strategy in that game, what you're doing and how you're playing it, because you could be winning because of the physical aspect of it, but you can literally lose the game because you didn't have the right strategy with it. So, you know what? This might be same thing with taxes, right? Like, you might be thinking you're doing all the right things, but then you find out that not quite.
You got
So,
to have the right structure, right?
structure.
Talking about retirement,
Yeah.
a buddy retire. Again, I'm getting old. We've been working probably for 20, 25 years now. I met him. I used to do a lot of, the old seminars where you drag the projector
Oh yeah. Yeah.
and then you take the screen. I think it was the screen, right?
Yeah.
And then you got to make sure everything works, and you put the laptop to the side and you're doing that. I did a lot of that with realtors and insurance agents, because
Yeah.
teaching people taxes is empowering and allows them to make the move, whatever move
Yeah.
it is. And I met this guy there. I remember I think he came to my house one time. He says, I've been trying to get a hold of you, but I can't. I looked you up and I know you live here. Kind of scary, right? But nice guy, my best friend now.
Yeah.
And since then, we've been working together as the same guy with the plane. And all of a sudden, he said, I told him I'm taking these classes and I got him going again. And he said, hey, tell me about it. Maybe we can go there. I said, you told me you're retired. So keep playing pickleball. And then he said, my back is hurting. So he
Yeah.
just had surgery, but he's one of these guys. In 2 weeks, he found the doctor, had surgery, and I texted him today. He said, walked a mile 3 days
Oh,
in a
wow.
row. And he had back surgery. And I'm thinking, wow, that's pretty impressive. But so again, retiring and expiring. Some people, they just love it, right?
Yeah.
But you got to have the right structure.
No,
Your
exactly.
back has got to be right.
Yeah. No, perfect. As we're closing, Miguel, where can people go and connect with you and get in touch with you?
The best thing is and thank you for asking this, is they can go to mpalma.com. The other thing is, Gabriel has been telling me for years that I got to get some sort of internet presence, YouTube, TikTok. So now we're trying to do Instagram, right? So they can do that as well. And yeah, I mean, we would love to sit down and let's chat. At a
Yeah.
minimum, you'll find out if you're overpaying because we'll tell you by how much. So you get a little bit of pain, how much you overpaid over the last 2, 3 years, and how much you're going to be paying this year if you don't change things. So that would be ideal. But yeah, half an hour, 45 minutes, and it's not BS. We're not going to be pitching you. We'll just tell you this is where you are. This is what you should be doing. And Daniel, I know you're not asking this, but again, your audience, I'm seeing some things just in general, right? Last time one of your guests was talking about fiat currency and what's going on politically,
Yeah.
right? And our current debt here in the US. And I sat on the board with John Walker. He was the Controller General of the US. And one of the things he used to say a long time ago was that our debt is our greatest security risk, right? So I would encourage your financial advisors to start talking to their clients, diversification, making plans. It just seems that something is coming up. I don't know what it is. I don't want to scare anyone, but that's why you're there,
Yeah.
right? To guide people. So again, I digress.
No, and listen, this is what it's all about. It's having a conversation, right? Like, we're not here to try to convince anybody. We're not trying to tell them that, hey, you need to go and do this or you should do that. We want to be a resource, and that's why you and I are doing these things, just to go and educate individuals. So listen, Miguel, it has been another powerful and perspective shifting conversation. Thank you for sharing your experience and your insight. And everyone listening, make life less taxing isn't just about money. It's about freedom, clarity, and it's about purpose. Keep building wealth, keep protecting your legacy, and keep learning how to live that untaxable lifestyle that we talk about. We'll see you next time on the Make Life Less Taxing podcast. Thank you again.
Thanks for joining us on this episode of Make Life Less Taxing podcast. Be sure to check out our other top advisor interviews at makelifalesstaxingpodcast.com.